there's different categories in the crypto market, right? You got DeFi, which is decentralized finance. You got the AI category. You got the gaming category. You got meme coins category. You got all these different categories. So, my opinion, and this is not financial advice, NFA, my opinion would be to expose yourself to all of those categories, right? Then in doing that, you pick the leaders in those categories, whether it's the number one leader in that category, the top two leaders, the top three, or the top five, whatever you want to do. But try to get some exposure to the top players in those particular niches, right? Then once you do that, then you can start sieving through, the trenches of crypto Twitter and, the social media and TikTok and whatnot, and try to find those gems, those really small gems that might skyrocket and turn your $1,000 to $1,000,000. That's what everybody is wishing for. And that's why a lot of people come into this space gambling. Mic check, 1, 2. What is this? What's good? It's your boy Dre La Soul here with some more crypto news and crypto wisdom for your head top. So today we're just going to be talking about understanding the crypto landscape, because there's tons of people jumping in crypto now, tons of people that's new to the game, tons of people that were in crypto maybe around 2017, maybe around 2018, maybe around 2020 even, and they probably didn't take no profits out. They probably did take profits out. They probably bought XRP, XLM, they probably bought Ethereum, even Solana when it was $5, but they probably forgot about it. They probably forgot about their Bitcoin. They maybe sent it into crypto oblivion. They probably don't know what they did with their money, but I'm here to give some wisdom, give some news for your head top so you understand how to navigate this landscape, because it is a crazy world out there in the crypto space, right? So what is cryptocurrency and why is it volatile? So the reason why it's crypto, because it's cryptographic, right? What makes it cryptographic is the technology that's behind it. Cryptocurrency uses blockchain technology. Now, there is some cryptocurrencies that use DAG technology, which is kind of like a spider web, but blockchain technology is specifically, or essentially, I should say, digital ledger technology. All right, distributed digital ledger technology. So, distributed ledger. So, a ledger is pretty much a list of transactions, right? Banks have ledgers. You might have a ledger for your business. You have a ledger for your expenses and so on and so forth, right? Now, it's a digital ledger and it's distributed. When I say distributed, that means there's a network of computers that operate and all have access to this ledger, right? So it's like everybody could see the receipts pretty much, right? There's transparency. Everyone could see the blockchain. It's distributed. So the beauty of that is that it can't be taken down, right? You cannot take down the Bitcoin blockchain network, because if you shut down one node, which would be a computer, if you shut down that node or computer, there's still hundreds and thousands or thousands of other nodes around the world that has that same data. So the data will never get lost, right? And it's cryptographic because it uses these numbers, a combination of numbers and letters for your address, for where you send your crypto, where you receive your crypto. The fact that you have to use a seed phrase to create your wallet makes it cryptographic. So it's like, think of like a lock and key, right? So cryptographic. Now, the reason why it's volatile is because cryptocurrency is very, very speculative, right? It's very speculative. And what makes it speculative is the fact that a lot of this stuff is just like theory. A lot of this stuff is anticipation. A lot of this stuff isn't really implemented in real life yet. A lot of these projects are coming up with things that are going to be invented for the future. So they have a roadmap. They try to get people to invest in their plan. So it's kind of like, startup companies telling venture capitalists like, hey, I got this plan. This is what I'm trying to do with my company. And do you see the future in it? And if people believe that there's a future in it, if there's a story behind it, if there's a lore, if there's a narrative behind it, then it gets network effect, then it has a following, which causes the price to go up. But the slightest little news can cause it to go down in price, right? It is very easily affected by macro activities and even micro activities that might happen in the crypto market. So FUD, which is fear, uncertainty, and doubt, can affect these coins really easily. They're very low in market cap and there isn't much liquidity. And the thing is that people pump liquidity into them just for the prices to pump up. Then they exit and then people get used as exit liquidity and people dump their bags on top of them. So it's volatile for that reason because it's a very new space. It's still in its infancy stage, right? Bitcoin is starting to mature a little bit more. Bitcoin is like in its pre-teens, young teenager ages, right? And then now it's getting accepted by traditional finance, Wall Street, institutions, so on and so forth. And those other cryptocurrencies like Ethereum and Solana, XRP are starting to get that recognition as well. But you still have thousands and thousands of coins out there that don't have that recognition, don't have that staying power, that clout. They don't have that. People just don't think that they're legit and official. Now there's different types of there's different type of cryptocurrencies. There's different categories, right? The main cryptocurrencies that you should study first is Bitcoin, Ethereum, stable coins, and then altcoins. Just remember those categories, right? So Bitcoin is the granddaddy. We all know Bitcoin, the granddaddy, that orange coin, right? Bitcoin is the very first cryptocurrency that was created by Satoshi, a peer-to-peer network for people to transact, send money. There's only ever going to be 21 million, right? It's immutable. It's more portable than gold, even though they call it digital gold. Immutable means that it just can't be changed. So if we write something on this ledger, you can't change it. It's there forever, right? And there's only ever going to be 21 million. So if you think of the basic laws of supply and demand, the fact that it's a store of value now, the more people want it and they realize that there's less and more people keep buying it, that causes the price to hike up. Basics of economics, right? Ethereum leverage blockchain technology and then introduce something called smart contracts. So smart contracts are just digital contracts that are executed without the need of a middleman. They're executed once two parties agree on something. You write the contract up in the code and it executes automatically. I don't have to remind anyone. No one has to remind me. They don't have to worry about keeping up with it. The code is where we put the trust in, so we don't have to put the trust in the human being. Smart contracts, right? And Ethereum also created the framework and the protocols for us to create new tokens. So tokenization, adding a token to a platform, adding a token to an item like a digital item or a physical item. Tokenization. That's all thanks to Ethereum. Now, there's coins that try to replace Ethereum and try to replace Bitcoin and recreated what they've done or leveraged their white paper, which is their instructions, and created something new, maybe even better and faster, more nimble. But these particular coins have network effect. They're the first mover, so they have first mover advantage, right? So people know these as the number one guys, right? Then you have stable coins. Stable coins are pretty much digital dollars, digital fiat currency. Fiat currency is like government issued currency, right? So stable coins are pegged to the dollar or pegged to a currency of a particular nation or a particular country, and it stays that level. That's why it's called a stable coin, right? And then you have altcoins. Altcoins are pretty much every coin other than Bitcoin. It's just a short word for alternative coins. So Ethereum is an altcoin. Essentially, stable coins are altcoins, essentially, because they're not Bitcoin. All right. Bitcoin is Bitcoin. Then you have altcoins, right? Now, it's all about diversification when it comes to this crypto market. Now, when I say diversification, that doesn't mean just spray and pray. And when I say spray and pray, just throw your money anywhere and any new shiny object that somebody says is going to be the next XRP, is going to be the next Bitcoin, the next Solana, so on and so forth. Don't do that. But when I say diversify, know that there's different categories in the crypto market, right? You got DeFi, which is decentralized finance. You got the AI category. You got the gaming category. You got meme coins category. You got all these different categories. So my opinion, and this is not financial advice, NFA, my opinion would be to expose yourself to all of those categories, right? Then in doing that, you pick the leaders in those categories, whether it's the number one leader in that category, the top two leaders, the top 3 or the top 5, whatever you want to do, but try to get some exposure to the top players in those particular niches, right? Then once you do that, then you can start sieving through, the trenches of crypto Twitter and, the social media and TikTok and whatnot, and trying to find those gems, those really small gems that might skyrocket and turn your $1,000 to $1,000,000. That's what everybody is wishing for. And that's why a lot of people come into this space gambling. We have like a bet society. Like think of like all these sports betting platforms, and now we have sports betting with blockchain betting with block bet, right? So there's a lot of different ways for people to extract value and money out of just betting that something will go up, something will go down, this will happen, this won't happen, so on and so forth. And that same mindset, that same culture is in cryptocurrency, of course, because we see people making millions overnight, thousands overnight, hundreds in hours, in minutes, and things like that, right? But it is a volatile space, and it's very easy for you to get burnt. As quick as you can lose your money, as quick as you can gain that money or make some money, you could lose it even quicker or just as fast, right? So just be careful out there, right? When it comes to choosing your crypto assets, make sure you research, right? Do your due diligence. Don't just take my word for it. I tend to not tell people exactly what coins to invest in. I kind of give them an idea of different coins, tell them to do their research, the reason why I think these particular coins are dope, and then you go from there and do your own research, right? I'm not going to tell you how much to put in there. That's all based on you. Everyone's different. $500 to me could mean $5,000 to somebody else. $500 to me could mean $5 to somebody else, right? So it's all relative based on that person and where they're at, where their portfolio is, how much income they have to risk, essentially, because this is all a risk. But we have to take a risk to get a reward. And that's what it's all about, right? So when it comes to the asset allocation, you got to figure out ways to break down your portfolio, right? So for instance, say you got a stack, $1,000, say you got 10,000, heck, let's say just for 100 for small numbers, right? You want to break that up, right? So one portfolio idea might be, okay, let's put 50% in Bitcoin because it's the granddaddy, BlackRock, Fidelity, all these companies are dumping money into Bitcoin, right? So why not have exposure to the granddaddy of cryptocurrency, right? And then maybe put that other 50% in some altcoins, and you could break it down where maybe I put 25% into Ethereum because it has that network effect, and then 25% into Solana because Solana is supposed to be the next Ethereum. Solana has that staying power, it has network effect. There's a lot of activity happening on Solana. It's the number one blockchain right now, and the Trump coin was built on the Solana blockchain. Remember what I said about tokenization and being able to create your own coins on Ethereum? Solana allows you to do that as well. Hence why they say it's the Ethereum killer, so on and so forth. But they all got their own space. Ethereum has the Ethereum Alliance Association. So Ethereum has aligned itself with the likes of like BP and all these big companies, right? There's tons of big companies, Microsoft, Amazon, AWS, all these different companies, right? And then Solana, it's kind of more for the everyday person, individuals and so on. And not to say that they're not working with businesses, but that's a good way to break it down and think about it, right? Now, another way you could do it is instead of thinking about Bitcoin, you hold off on Bitcoin, right? And the reason why I'm saying this is because the market has cycles, right? There's ebbs and flows. It goes up and down, up and down, up and down, right? Bitcoin is going to shoot up and then it's going to come down. Then eventually those altcoins shoot up and then they come down and then Bitcoin reverses and come back up, right? So a good strategy would be to say, hey, all right, let's hold off on the Bitcoin right now. And then I'm gonna put 50% in Ethereum, the number one altcoin. Then the other 50%, I'm gonna break it up 25% into Solana, and then the other 25%, I put it into some very what I like to call spicy cryptocurrency. So there's different levels of crypto, right? It's all broken down by market cap, right? So you have your large caps, you have your mid cap, you have your small cap, and you have your micro cap. The large caps are usually coins that are in the billions, which would be Bitcoin, Solana, Ethereum, the top 3, top 5, top 10, whatever. Then you have your mid caps, which are in the high hundreds of millions, right? 200 million, 300 million, 400 million. Then you have your small caps, which might be just 100 million, maybe touching 100 million, 90 million, 80 million. Then you have the micro caps, which are really small, 2 million, 3 million, maybe even 2,500. Sorry, 25,000 up to 100,000, maybe 200,000, so on and so forth. Those might be your micro caps. So there's different categories, but know that as you get lower down the totem pole, as you go down to the smaller micro caps, because totem poles work in reverse. So if you go down to the smaller market caps, keep in mind that it gets very volatile, and these coins could just disappear. A lot of them go to zero. They just disappear because they're vaporware. They're just hype. Some of them are derivatives of hype. Like, for instance, when Dogecoin came out and Dogecoin got popping, you had Shiba, Floki, and then you had Doge Elon, and then you had all these other dog coins that was coming out. But a lot of them went to zero. A lot of them aren't really doing much because they're just derivatives. They're not the first mover. So those micro caps could be very volatile. So risk tolerance is important, right? You need to balance your portfolio based on the different assets that you like, or the categories that you have interest in, or the ones that you have time to study and research, because you have to study and research this stuff. You got to know what you're putting your bread in. Don't just spray and pray, Risk tolerance is essential. Balancing potential returns with risk levels is key, right? So you need to know what risk you want to be at and be able to balance that. And the reason why I was saying hold off on Bitcoin is because some of those coins will go to zero. Now they might pump, and the idea is to take out when they pump, take out your profits when they pump. And those profits you take out from those very risky, spicy coins, you then put it into Bitcoin and leave that in the stash, because we know that Bitcoin is going to continue to go up because it's already written in the code. You feel me? So that's another idea. And this is not financial advice. This is just opinion. I'm just spitballing off the top of the dome. I don't even know what I'm talking about. You heard? But there's also time horizon. You got to consider your time horizon, right? You got to think about if it's going to be short term, if this is a long term investment. Your Bitcoin might be a long term, Ethereum might be a long term. Solana might be a long term, midterm, short term, even. I don't know. That it all depends on you and what you want to do. You feel what I'm saying? Then you have managing your crypto portfolio, right? So when it comes to managing this crypto portfolio, dollar cost averaging is very important, right? Dollar cost averaging is something that Warren Buffett lives by, something that a lot of the top investors live by. And this is just regular investing over time, invest in a fixed amount over time. So you can dollar cost average every week. You can do that every month. You could do that every quarter, but it's a fixed amount consistently that you're repeating. You know what I'm saying? $10 every week, $20 every week, $100 every week, $1,000 every month. You know what I'm saying? And you're putting it into that asset. So dollar cost averaging. And the reason why they say it's averaging is because you end up benefiting from the average price of what you bought your asset at, right? So say for instance, this particular crypto that you're interested in is at, let's say my computer's about to die. Say for instance, this crypto asset that you're interested in is about $100, right? It's about $100. So you put it in 1 week, it's $100. Then there's some volatility in the market. Some things happen, some FUD, and then it goes down to $90. Next week you bought it at $90. Still some FUD. There's still some bad news. It's going down to $80, and then now you scooped it at $80. But remember, you were still putting in $100 because your idea was to put in $100 because that was the price. That's what you started at. So I'm gonna continue to put the $100 in to buy at least one share. But now that it went to $90, now that it went to $80, I bought 1.10 shares, right? So I bought one share plus a fraction of a share, right? And that was compounding and that was building. So over time, I'm getting it at different prices and it's averaging out. My price for my investment, my initial investment is going lower. depending on, the fluctuation of the markets. And then this is what causes you to get that snowball effect and for you to balloon those investments. Compound interest. Albert Einstein said this is one of the wonders of the world, compound interest. So dollar cost averaging and then rebalancing, knowing when to adjust your asset allocation over time, knowing when it's time to take out of those risky coins and put it into something more solid, knowing when it's time to maybe even take out some profits from the solid coins and get a little risky. It all depends, but you got to pay attention to the market. Sometimes you might just set it and forget it. That's good also, because then that will take your mindset out of the emotion, because that's what usually plagues everybody's portfolio is the emotion. People get emotional, right? Everyone works in the wrong way. They see the price going up and that's when they want to invest. They see the price going down and that's when they want to sell, when it really should be in reverse. But if you set it and forget it, then you're not even thinking about that. You throw your bread in there and then you come back later in a few months and so on and so forth. Now, security is key in cryptocurrency, right? There's people out there that want your coins. So do not give up your coins. Don't give up your coins to anyone, right? These scammers, these hackers are out here trying to steal your coins. They come up with elaborate different ways to access your information, access your data, connect to your wallets, and then wipe out your coins. It has happened to me. Trust and believe. It's happened to your boy. I've been in this space since 2017 and I've been scammed twice already, right? And was also a part of a rug pull and was also a part of the debacle with Celsius. Luckily, I took my bread out before FTX collapsed, but I did invest in the FTX token on another platform and I can't even trade it. You know what I'm saying? Like, so that $100 or whatever it was, I wanted to put that into an AI coin. And I can't even do that because there's no tradable pair with that asset because nobody want to mess with it because of what happened with Sam Bankman-Fried. So you got to be wary of that. Be careful of that. Be willing to invest what you're willing to lose, right? Be willing to invest what you're willing to lose, or invest what you're willing to lose. That's the best way to say it, right? Invest what you're willing to lose because there's a chance that you can lose it. But if you don't risk, you don't know what can happen. You don't know what can be made of the money, because if you just leave it in that savings account, ain't nothing really happening with that. You feel what I'm saying? But security is important. So I would suggest getting a cold storage wallet. A cold storage wallet is a cold wallet. I'll show you one right now. So that is a wallet. Some of them look like thumb drives, but this is like a device where you can store your cryptocurrency. So this is the Ledger Nano S. This is a device where you can store your cryptocurrency, cold storage, take it off the exchange, right? Then we also have hot wallets, which are wallets that work just like this, where you can store your cryptocurrency, but instead of them being a physical device, they are an app or a desktop extension or application, right? And the reason why they call it hot is because it's connected to the internet. So there's still a level of risk when it comes to the hot wallets. This is probably the ultimate as far as like security, cold storage, because it's not connected to the internet. You plug in, send your crypto, plug it out. There you go, right? So security, make sure you got strong passwords, right? And make sure you store this information in a safe place, right? Now, when it comes to investing, whether it's stocks, mutual funds, bonds, crypto, you got to keep up. You got to stay informed and keep adapting to the ever-changing market because things are always changing. One day AI is popping, then the next day meme coins is popping. Then one day we're using this wallet, then there's the new wallet that's coming out. So things constantly change. So just be able to keep up with the changes, right? And be able to, stay informed with what you're invested in. So that's why I also say try to keep it to a certain amount. Don't just go crazy and buy every single coin because then you're not going to be able to keep up with that. And I got to remind myself about that sometimes as well. It happens to the best of us, right? But you got to keep up with the market trends, keep up with the news, stay tuned to this channel, follow us on social media, on Instagram, Twitter, or X, TikTok. The handle is Urban Blockchain, the same everywhere, or go to our website, which is going to get revamped with some new articles and so on and so forth. But it's a perfect time to do my shameless plug. If you need to learn or you want to learn about crypto, and I say need because we all need to learn about it, but if you want to learn about cryptocurrency, blockchain, the basics of Bitcoin, then head to urbanblockchain.com, purchase the ebook. It's only $5. You know what I mean? I also have an ebook on NFTs. People think NFTs are dead, but they're not dead. When it comes to crypto gaming, NFTs will be lit. NFTs will be used in so many things that we don't even know. NFTs could be used for titles, for deeds, a lot of things, right? Anything that's a unique asset that you need to verify, you can use the NFT to do that on the blockchain, right? So I got another ebook about portfolio breakdowns and how to allocate your funds to your blockfolio is what I like to call it. And that one is actually free. So you could download that one for free. But yeah, head over to the site, support your boy. Even if you don't buy anything, just support, and take a look. Tap in with your boy, keep up with us, and download apps like CoinMarketCap, CoinGecko. Look into websites like Decrypt and CryptoSlate and, things like that. So you can keep up with the market. Adapt to what's going on because it's an ever-changing market. Be able to keep up with your blockfolio and have a strategy, right? Ultimately, we all want to win, and I want to make sure you guys win too. So we're gonna win together, you know what I mean? But this space is PvP, player versus player. So don't think that everyone is out here trying to help you out. There's very few people that are trying to help the people that are in their audience, right? Or everyone is trying to dump the bag on someone else and see who could get the highest gains, who got into the coin first, right? It's a lot of that. So try to, stay away from the noise, buckle down, focus, you know what I mean? And, just be careful out there as you invest in these coins, into these coins. You feel me? But yeah, that's all I got. So again, diversification. But when it comes to diversification, be minimized, right? Have a way or an idea of how you want to break down your portfolio based on your percentage and allocation. Then once you find those coins that you have conviction in and that you like, then dollar cost average, DCA, but this is NFA, not financial advice. And then Dior, DYOR, do your own research. It's your boy Dre Lasso. That's it for Crypto Rants. We out.